Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. Well, we continue to talk about the euro currency and start as usual from the daily time frame. During the price action for the couple of weeks, now we see some hints and clues for the potential continuation on the market. So now current price action looks like the consolidation inside the triangle that looks like the pennant pattern on the weekly time frame. Well, and personally I think that there could be two different scenarios, but both of them still bearish. Well, in general, the triangle after the solid trend to the downside looks like the continuation pattern and should be treated as the potential bearish continuation pattern, especially if we take a look on the weekly and monthly time frames. We see that both trends still hold bearish, so here we could say that probably by some development this will lead to the continuation to the downside. But taking into account the daily trend, now it holds bullish, it tells us that probably market could show some deeper move to the upside. The first scenario is a classical one. This is, as I said, triangle. So usually consolidation inside of the triangle consists of 5 waves. This is the first one, second, third, fourth wave could be till the upper border of this triangle, and then during the fifth wave market usually shows the breakout of this pattern. Another confirmation could come if fourth wave will not reach the upper border of the triangle and turns to the downside. That will tell us that market is probably weak and is ready for the breakout to the downside. That is the first scenario, is the classical approach. Another scenario could come by the harmonic patterns, could be the Gartner's triple two sell pattern. This is initial swing to the downside and ABCD retracement. In that case, if market will take out the break this upper border of this triangle, it could proceed to the 136-136.30 area. But this area is really a strong area of resistance. That is the daily confluence resistance, 136.17, 136.31, and also agreement with the target of the ABCD pattern. This will be a really strong area, and if market currently is still bearish, it should not break this area to the upside. That should be the point of the reversal and reestablishing of the move to the downside. Well, but any of the scenarios let us to create the trading plan for the beginning of the week, because as with the one scenario as with the another, we suggest that market should show some upward move in the beginning of the week. Okay, so let's take a look at this scenario with the more details. On the 4-hour time frame, what do we see? First of all, trend holds bullish. Since market stands above this red line, the red line is the MACD predict indicator, and the trend when the price action stands above it, then current trend is bullish. Also take a look at these candles, one to the downside, frosty move, then again to the upside. When this has happened and when market is showing such kind of candles in the opposite directions, this could be the sign of the shifting of the momentum. And that shift has happened right at the lower border of this triangle pattern. Now trend holds bullish. Also you can see this is some kind of bullish stop grabber pattern when the market has tried to shift trend to the bearish side but has failed and closed above it. This pattern suggests that the minimum target of this approach of the potential move to the upside will be that high, 134.47. So market should take this high. Also take a look at that area. This is the daily 618 target, 134.84, but that is also 100% extension from that pattern. A, B, C bottom, 618 target, 136.24, 100%, 134.84. So the same area right below the border of upper border of the triangle. Also take a look at that red dash line. This is 134.78, the weekly pivot point, resistance 1. As we said in the previous researches, we said that when market holds on the long-term bear trend, and when it starts some retracement, it usually retraces to the weekly pivot resistance 1. So that's why that area is very important, since this is weekly pivot resistance 1, some targets, and upper border of the triangle. If market will take this resistance 1 area and continue move to the upside, we might say that probably market, the next area target is around 136, 136.30 area. That's why that area is very important for the nearest term perspective. But if you are an intraday trader, you could try to search for the possibility to enter on the long side of the market, since daily trend is bullish, 4-hour time frame is bullish, and you can see that hourly trend is also bullish. So you can see that market very well behaves above this red line. This is also another stop grabber that has another the same target is around 134.47. So you can see this clearly ABCD pattern with the target is the same as daily time frame. So what we could say, first of all, if you trade on the daily time frame and you are bullish, you have no context to enter long based on the daily time frame, because weekly trend is bearish, and you should just wait another possibility, because long-term perspective is bearish. If you are bearish and you trade on the daily time frame, then you should wait for the at least that area to search for the potential sell signals, 134.84 area. If market will break that area to the upside, then you should not enter short until market will reach 136, 136.30 area. For the intraday traders, they have the bullish context because daily trend is bullish and hourly 4-hour time frame trends are also bullish. So you could try to search for the possibility to enter on the long side of the market with the target 134.84. But I suspect that the first retracement that you potentially could try to use will not come, at least market will hit this target 134.24 from that pattern A, B, C bottom. Only after that market could try to show some retracement. But if you get the luck and market will show retracement before that, probably to the weekly pivot points around 133.80, then you could try to enter long with the nearest fib support on the hourly time frame. Your target will be right here, 134.84. So that being said, we could say that market now stands under triangle consolidation on the daily time frame, and in general, if even market will show the breakout to the upside of that triangle, this will not erase the overall bearish context, long-term bearish context. This will be just a deeper retracement and could lead to the Gartner's 222 sale pattern. Another way how market could behave is just show the classical breakout of the triangle pattern to the downside. But anyway, in the beginning of the week it should show some continuation, a bit further continuation to the upside to the around 134, 134.80 area. So as we said, daily traders have a bit different context from the intraday traders. So while daily traders should wait for the potential areas to sell, intraday traders should search for the potential possibilities for buy with the nearest target around upper border of this triangle.